Let's get the early tick. Here now are Ethan Anderson, Senior Portfolio Manager with Raymond Financial, and Uri Landesman, President of Platinum Partners LP. All right, Ethan, you're up first. Looks like volatility's back, but does it mean we're headed down or up or anything?
Volatility's back for now, but we're really at an inflection point as far as the markets go. You have relatively low interest rates and a lot of cash on the sidelines, which should keep the market from dropping significantly. On the same side, it's hard to get people excited right now. You're getting top-notch year-over-year earnings results. We're finally seeing that top-line growth that people were looking for. What's next? What is going to be able to drive the market higher? What is not priced into the market? Our opinion right now is the big thing we need is jobs growth in order to be able to keep this market going higher. Absent of that, when you consider the things going on overseas and the fact that we are in a potentially a sell and may go away time frame, we're a little cautious here. Put that all together, and I think you have an environment of low volatility going forward for the next 6 to 7 months.
Uri, how do you see it?
Well, I think right now we're talking about a pretty good story in the U.S. ex some of the financials. Overseas, we clearly have some problems in the PIGS countries, most notably Spain. Right now, there's some fear about China. So markets buffeting back and forth. We're in a relatively tight technical range right now in the S&P between 1183 and 1230. I think we're going to hold 1183 here, bounce around between that range, and then possibly go as high as 1275, 1300 before settling in a little bit.
Ethan, I think you kind of highlight the situation in which a number of analysts now feel that they're in. We've basically met what was the year-end target for most people. Some are nudging their targets higher, but you're still broadly as a community at a loss to explain what happens over the next 8 months. And therefore you kind of default to the idea that, well, maybe it'll be seasonal factors or whatever. Nobody really pins down why the market should correct, why the market can't actually accelerate up from here in the same way as it surprised so many people in the first 4 or 5 months of the year.
Simon, the big thing that people are wondering about right now is this recovery for real? Like you said, we've seen tremendous earnings growth.
What do you see that would indicate it's not for real, with respect?
Well,
where does this nightmare come from?
For one, government spending. 2010 is the year out of the Obama stimulus plan that the year out of the 4-year plan that the majority of money gets spent. So you're going to see less stimulus spending occurring next year, and I think zero for the current package occurring in 2012. So investors are looking at this situation, knowing that we've got a nice bounce, but also knowing next year we're going to have less stimulus spending.
That's just a nightmare. It's perfectly reasonable that the economy could come back very strongly. The factory figures yesterday were great. Consumers are spending and not saving. The data around us, what we see is very bullish. Uri, come in, help me out here.
Yeah, no, I'm inclined to agree with you. I think the U.S. recovery is doing very, very well. Earnings have continued to surprise on the upside. I'm as surprised as you are at how strong the consumer is. That's the piece that needed to happen. We need to see housing prices stabilize a little bit more, some job creation, and I think that as long as Europe and Asia don't fall apart and kill our exports too much, I think we're going to be fine.
Not to be a wet blanket, and certainly this has little to do with the short term, but in the long term, don't we have really serious problems with the level of the federal deficit, with the level of personal debt, with the withdrawal of credit? I mean, aren't these...
You've had that for years here. For years. That's not new. When did you suddenly wake up to that? Right through the bushes you had a problem with that.
Whoa, I'm taking a beating here from the
from a foreigner.
From the guy from the mother country. But seriously, I mean, now, after all the spending, the deficit becomes a more front-burner type of problem. Or am I wrong, Uri?
No, I think you're right. I think there are some very serious... There's some very serious long-term structural issues that we have to deal with. I don't disagree with anything that you just laid out. What's going to happen is, as my colleague mentioned earlier, government spending is going to have to start being constrained somehow, and we're going to have to slowly, gradually absorb some of that with real demand both from the enterprise and from consumers.
All right, we have to kick you guys out. Uri Landesman, Platinum Partners LP, Ethan Anderson, Raymond Financial, Senior Portfolio Manager. Thank you both very much for sharing your thoughts with us.